This video chart presentation of Lucas Energy Inc. Lucas Energy is an AMEX or so-called New York Stock Exchange market stock, trading our ticker LEI. Chart's put itself together a real nice uptrend throughout July and kept it strong to start August. I think it's interesting to note a few different things about this chart. We look back in retrospect on some plays to show patterns that evolved and how they're playing out. And we do that because we try to catch charts in the bottom parts of patterns because of the potential upside. And with LEI, I just like to note the little double bottom that was formed. And also like to show how it came off the PPO ADX pinch. And the exact thing that we look for in charts when we're trying to catch it on those bottoms. Of course, it's pretty noticeable the way MACD's been trending back towards zero. Now broke through zero. It's showing a strong bullish trend. As I mentioned, came off the PPO ADX pinch. One thing that we always comment. After the pinch, look for the initial bounce and for the PPO to continue to trend back towards zero. Because typically after that first bounce, the PPO and the MACD keep trending back towards zero. The play is trying to find a bottom. And see right through there, initial bounce, retrace, PPO and MACD both still trending upward, holds support, rotates off that support, and makes a stronger move. ADX is now going into a bullish position. We'll look, of course, for the ADX to continue to move upward, show strength of the direction. Coming off that bottom, you see the shift in the money flow index, moving from the lower half to the upper half of the indicator, which tells me that basically premium prices are starting to be paid for the stock over the given periods. Again, that's bullish. Even as the stock kept trying to trend a little bit lower, accumulation distribution was definitely starting to soften, showing that the selling pressure was subsiding. That was also more clearly seen in the Chaikin money flow, which was making higher lows. Now popped back into the green, which says over the last 20 periods, buying pressure is outweighing selling pressure. Leading into the initial bounce, CCI was trying to trend upward. In the broader perspective, continued to make higher lows. Of course, officially that was the buy point to break through 100. But bottom feeders, as we mentioned, use the break of negative 100 as the buy point to try and catch the full breadth of the move. And it's a hold unless it breaks back down through negative 100. So you can see in this case, break back through, it would have been a hold the whole time. And while just a little nuance and not technically the way you play the CCI, the buy point is of course the break of 100. That's why people that use that indicator use it in different manners based on their trading style. Similarly, the full stow showed that momentum was trying to come into the play. And although it did make a pretty hard dip right through here as the stock pulled back, primarily over the last 2 months, holding above 50, showing that bullish momentum is staying in the play. Tricks, also showing a strong trend, uptrending back towards zero. Similarly, the RSIs, pushing upward through here, showing some strength. But I always talk about the idea of breaking through 50 for the longer terms, the red and gold line, the 14 and 21, to show true bullishness and sustained bullishness. And right through here, they couldn't quite make the break, which would be telling me this is starting to lose a little bit of momentum. And of course, it did drop back off. But when it came through here, and those longer terms made the break, you can see the momentum that started to come into this play and the way it sustained from that point forward. So those are some of the things that we always talk about in charts and what to look for while things are going on. And that's why we use the indicators. And I would say the candles are always still the main focus. And there's a pretty solid support right here around $1.40. Now the true bottom people may call $1.25 or some other solid support right there around $1.30. As the stock pulled up from those levels in intraday trading on several occasions and closed back up to show strong support at $1.40. Now as far as this double bottom goes, certainly some resistance right there around $1.65. I only have this dialed into about a 9-month chart. I can't actually tell if there's more support right through there or not. But in the short term, you can see the resistance at $1.65. And then again, heavier resistance after the gap down, right there around $1.95 or so. Of course, the stock almost hit that yesterday, high of $1.93, and I'd suspect that to be a tough resistance point again. But if this chart's going to stay strong and it wants to pull back, I'd look for it to hold that support level around $1.65 or so. I could say that there's a little bit more right in through there, but I would go to the lower end, look for it to hold that old resistance as support at $1.65 as it tries to challenge this resistance point and that 200-day moving average, which is almost tying in with the idea of filling this gap back up to 215. Now it's still a nice move from where it is to fill the gap, 10% or more. Big increase in volume yesterday, 1.2 million shares traded. Clearly far more volume than stock's been trading over the last 3 months. I'd look for this volume, try and stay strong if it's going to blow through this resistance and fill that gap. If that does happen, any pullback, very worst case scenario, all the way back down to $1.65, but ideally, hold right up around this $1.95, continue the strong uptrend by making higher lows and higher highs. It's a nice looking chart and very interesting from a back check situation to show why we look at charts at different patterns and why we always emphasize the holding of support levels during the pattern. And overall, I'd still keep an eye on LEI to see how it performs from here forward. But as always, merely my interpretation of the Lucas Energy chart. Thank you for watching and trade smart.